Hey, it's Darius. Here's an opportunity to join my I-75 CMA Facebook group. It's brand new, so you could be one of the early influencers. I'll leave a link in the description. Now we're going to look at the income statement and see what goes into each expense category. If you remember our multi-step income statement with all the subtotals, we have revenues minus cost of goods sold equals gross profit, our first subtotal. So that means our first expense is cost of goods sold, and that's often the biggest expense on an income statement. And the exam will certainly expect that you can calculate cost of goods sold. So for cost of goods sold, we start with beginning inventory, add purchases plus freight in, and that gives you cost of goods available for sale. Then when we subtract ending inventory, that's how we determine cost of goods sold. Remember that freight in is part of cost of goods sold. Whatever the purchases figure comes out to be, add the freight in. So here's one where they ask us to calculate cost of goods sold for the year ended December 31st, 2023. So they tell us that CorrectTemp has provided the following information for the fiscal year ended December 31st, 2023. Beginning inventory is given, so is purchases. We'll add the two of those together. They give us purchase returns though, and allowances. We'll have to subtract that $20,000 from purchases to get the net purchases. And then we'll add the freight in. We'll ignore freight out because freight out is a selling expense, not a purchasing cost. And then we'll subtract ending inventory of $150,000. And when we do that, cost of goods sold comes out to $410,000, which is answer choice A. And here's our calculation. We start with $120,000 of beginning inventory, that's given. So is the purchases given at $450,000. Together that's $570,000, but subtract purchase returns of $20,000, add the freight in, subtract the ending inventory, and cost of goods sold is $410,000. Remember that freight out is a selling expense, not part of cost of goods sold. So freight out of $1,000 here was a distractor. Make sure you ignore it if they're asking for cost of goods sold. Letter A is correct. So we said our first expense is going to be cost of goods sold on an income statement, and that's strictly limited to direct costs related to the purchase of goods and the freight in. Cost of goods sold could be the biggest expense on an income statement, and it's very important that a business is profitable here at the gross profit figure. This gross profit figure is often called gross margin, and it's very important that a business be profitable at the margins. And if you ever hear that term, that means when you subtract cost of goods sold from revenues, there's got to be a profit here. It's expected that a business is profitable at the margins and would be an indication of a disaster if they were not profitable at the margins. If there was already a loss here at the gross profit figure, when you take revenues from primary business activities and subtract cost of goods sold, if this figure was a loss, well, the income statement is not going to get any better from here. Because next comes the operating expenses, like selling expenses and general and administrative expenses. They haven't even been subtracted yet when we get to gross profit, so we're going to look at those now. What kind of expenses are selling expenses, and what would be considered general and administrative expenses? So general and administrative expenses include utilities, officers' salaries, property tax expense, payroll tax expense, insurance, legal and accounting fees. That's all general and administrative expenses. Selling expenses include freight out and also advertising, and even sales salaries and sales commissions would be part of selling expenses. Notice that officers' salaries are general and administrative expense, but sales salaries and sales commissions, that's selling expense. Depreciation expense is not lumped in with general and administrative expenses, but instead, you'll see depreciation as a separate line item just before income from operations. And while depreciation expense is from normal operations, interest expense is not. Interest expense is not from normal operations. Where do you find interest expense on an income statement? It's part of other revenues, expenses, gains, and losses. So here on this income statement, you can see that under gross profit comes selling expenses, general and administrative expenses, and then there's a separate disclosure for depreciation expense right before income from operations. And here you can see that gross profit is positive $240 when you subtract cost of goods sold from net sales. You got a positive 240. But then after selling expenses and general and administrative and depreciation expense, we wind up with loss from operations of 70. And that loss of 70 is from normal operations. So yes, they were positive at the margins, but then when they threw the expenses in on the income statement, it turned the positive 240 into a loss from operations of 70. And that's before the other revenues and gains, which include interest income, gain on sale of fixed assets, and then other expenses and losses, which include interest expense and a loss on sale of fixed assets. Because of the other income here of $350, that turns this $70 loss from operations into a positive bottom line. By the time we get all the way down to the bottom, net income is actually positive, but that's only because there was a one-time gain or other income of $350, which is not expected to recur. And that's the reason why we put these other revenues and gains and other expenses and losses in this non-operating section of the income statement. Because whatever's down here in non-operating, that's not expected to happen again next year. The analysts know when they read the income statement that what can be expected to happen again next year is up here in the normal operations section. The net sales, the cost of goods sold, the gross profit, and the selling expenses, the general and administrative expenses, and the depreciation expense. The analysts are interested in this figure right here, income or loss from operations. But on the exam, they're going to ask you what expense goes in what category. So we got to be ready for questions on general and administrative expenses and what's included there, selling expenses and what's included there, and where do we find depreciation expense and interest expense. All right, on a multi-step income statement, which of the following should be included in general and administrative expenses? How about 1, interest expense? No. 2, legal and accounting fees? Yes. So the answer is B. General and administrative expenses include legal, accounting, insurance, property taxes, officer salaries. Interest is separately reported. It's a non-operating expense, and interest appears on the income statement within the gains and losses section. So here's where you'd find interest expense, down here on an income statement in the non-operating section, where you find other revenues and gains, other expenses and losses. That's where interest expense and interest income would be. But legal and accounting fees, they would be up here in general and administrative expenses. All right, how about this? On the multiple step income statement, which of the following is correct? 1, depreciation expense is a separate line item. Yes, it is. 2, advertising expense is considered a general and administrative expense. No. So letter A is correct. Depreciation is a separate line item and not lumped together with general and administrative expenses. And 2 is wrong. Advertising is a selling expense. Advertising is not part of general and administrative. And on the exam, it might look like this. What amount of these costs should be reported as general and administrative expenses for the current year? They tell us the following was incurred by Josh Company, a manufacturer. Accounting and legal fees, $25,000. Is that a general and administrative expense on the income statement? Yes, it is. What about freight in? $75,000? No, freight in is part of cost of goods sold. How about freight out? $120,000? No, freight out is a selling expense. Officers' salaries, $150,000? Yes, that's general and administrative. So far, we're up to $175,000. Insurance, $45,000. Is that general and administrative? Yes. So we're up to $220 right now. And then there's sales rep salaries, $215. That's a selling expense. So the answer is letter B. $220,000 would be general and administrative expenses. All right, how about this? How much are considered selling expenses? All right, we got a lot of expenses to go through here. Hairston Corp reports operating expenses in 2 categories, selling and general and administrative. The adjusted trial balance included the following expense and loss accounts. Well, we don't want any losses. We don't want any general and administrative expenses either. We just want selling expenses. So let's see. Legal and accounting fees? No, that's general and administrative. Advertising? Yeah, that's a selling expense. $160,000. We're off and running. Freight out, $70,000. Is that a selling expense? Yes, it is. We're up to $230,000. Interest, $30,000. No, that's part of other expenses, losses. Loss on sale of, no, we don't want that. We want selling expenses. Officers' salaries, that's general and administrative. Do we want general and administrative here? No, we only want selling expenses. Rent for office space, no, it's not part of selling. Sales, salaries, and commissions, $60,000. Yes. So we go from $230,000 up by $60,000 for the sales, salaries, and commissions. Looks like $290,000 is our answer. And that's choice B. Selling expenses typically include costs directly associated with the sales function, like advertising, the $160,000, sales commissions and salaries, $60,000, and delivery costs, freight out, $70,000. Total of $290,000, letter B. All right, here's the same facts again, or very similar. We're going to put one little hook in it, though. I'm going to show you what the exam could do. So again, they want to know how much are considered selling expenses. All of these costs are exactly the same as what we just saw in the previous question, but they're going to give us one little, check this out. If 1/3 of the rented office space, this $90,000 that we did not include before, if that was occupied by the sales department, how much are considered selling expenses? Okay, so we added up and we got $290,000 when we included selling expenses like advertising, freight out, and the sales, salaries, and commissions. But now they're telling us 1/3 of this $90,000 rent expense is for the sales department. So then we got to take 1/3 of that $90,000 and add that to selling expenses. And when we do that, now our selling expenses are $320,000 instead of $290,000. So the answer is A. So exactly the same expenses from last question, plus we're going to add 1/3 of the rent now because 1/3 of the office space is occupied by the sales department. Good little exam trick. Look out for that. How about this? On a multiple step income statement, income from operations includes a deduction for cost of goods sold, loss on sale of securities, both, neither. And if you think you know, leave me the answer in the comments section. And if you're struggling with the CMA exam or the CPA exam, and you found this video helpful and want to see the rest of it and more videos like it, get yourself on I-75 with me, Darius Clark. I'll leave a link in the description. You see the menu bar at the top. If you're a CMA candidate, you click here and choose Part 1 or Part 2. I-75 CMA is the only material that you will need to pass the exam. You might have some other stuff, but you don't need it. In fact, if you don't think I-75 is better than any other CMA material that you have, let me know, and I'll let you return it for a 50% refund. So what do you have to lose? So whether it's CMA or CPA, go to i75cpareview.com and get yourself on I-75 with me, Darius Clark, because the right teacher makes all the difference.